Hello and welcome to our podcast, where we discuss important topics related to finance and technology. Today, we're going to talk about inflation in the US and how it affects Bitcoin. I'm your host, Langeline, and with me today is Nick White, a financial expert and Bitcoin enthusiast. Welcome to the show, Nick.
Thank you for having me, Langeline. I'm excited to be here and discuss this topic.
So let's start with the basics. Can you explain what inflation is and how it affects the economy?
Sure, inflation is the rate at which the general level of prices for goods and services is rising, and in turn, the purchasing power of currency is falling. In other words, inflation makes the things we buy more expensive over time. This can lead to a decrease in consumer spending, which can, in turn, lead to a decrease in economic growth.
And how does this relate to Bitcoin?
Well, Bitcoin is often seen as a hedge against inflation. Unlike fiat currencies such as the US dollar, Bitcoin has a finite supply, with only 21 million Bitcoins ever to be mined. This means that Bitcoin is not subject to inflation in the same way that fiat currencies are.
I see. So it seems that the discount rate plays an important role in the price of Bitcoin.
Yes, that's definitely true. The discount rate is just one of many factors that can influence the price of Bitcoin, but it's an important one to keep in mind.
And how does this relate to inflation in the US?
Well, when inflation is high, the Federal Reserve may raise interest rates to combat it. This can lead to a higher discount rate, which can decrease liquidity in the market and cause stocks and crypto to become cheaper. However, when the reverse process starts, lowering the rate, lowering inflation, liquidity will return to the market and growth will begin.
That's a great point. So it seems that inflation and the discount rate are closely intertwined with the price of Bitcoin.
Yes, that's definitely true. The price of Bitcoin is influenced by many factors, including inflation, the discount rate, and market sentiment.
But isn't Bitcoin also subject to price fluctuations and volatility?
Yes, that's true. Bitcoin is a highly volatile asset, and its price can fluctuate rapidly. However, many investors view Bitcoin as a long-term investment, and so short-term price fluctuations are less of a concern.
I see. So what implications does this have for the wider economy?
Well, as more people invest in Bitcoin, it becomes more mainstream, and its influence on the wider economy increases. This means that the Federal Reserve and other central banks may need to take Bitcoin into account when making monetary policy decisions.
That's a fascinating point. So, do you think that Bitcoin could eventually replace fiat currencies altogether?
It's difficult to say at this point. Bitcoin still has a long way to go before it becomes a widely accepted form of payment, and there are many regulatory and technical challenges that need to be overcome. However, I do think that Bitcoin has the potential to become a major player in the global economy in the years to come.
But can we say that Bitcoin is a safe haven asset during times of inflation?
While Bitcoin has been seen as a safe haven asset by some, it's important to note that it's a highly volatile asset. Its value can fluctuate rapidly, and it's not backed by any physical asset like gold. So, it's not a guaranteed safe haven asset, but rather an alternative investment that some people choose to turn to during times of inflation.
And how do you see the future of Bitcoin in the context of inflation in the US?
Bitcoin has come a long way since its creation in 2009, and it has proven to be a valuable investment for many people. As long as there is inflation in the US, we can expect to see Bitcoin being used as a hedge against it. However, we should also keep in mind that the future of Bitcoin is still uncertain, and it's important to do your own research before investing in it.
Nick, I'd like to dive deeper into the role of institutional investors in the recent surge of Bitcoin prices. Could you tell us more about that?
Absolutely. The recent surge of Bitcoin prices can be partly attributed to institutional investors increasing interest in cryptocurrencies, especially as a hedge against inflation in the US. Institutional investors have a much larger pool of capital than retail investors, which can significantly impact the demand and price of Bitcoin. For example, in late 2020, business intelligence firm MicroStrategy announced that it had invested $425 million in Bitcoin. This move was followed by similar investments from other institutional investors, including payment companies like PayPal and Square, as well as investment firms like Grayscale. These investments signaled to other institutional investors that Bitcoin was a viable investment option, leading to increased demand and driving up prices. This trend continued in early 2021, with several large financial institutions, including Goldman Sachs and Morgan Stanley, announcing plans to offer cryptocurrency investment products to their clients.
That's fascinating. How do you think this trend will impact the future of Bitcoin and other cryptocurrencies?
I believe that the increasing involvement of institutional investors in the cryptocurrency market will bring a new level of stability and legitimacy to the industry. Institutional investors are subject to strict regulations and investment policies, which could lead to greater transparency and accountability in the market. However, there are also concerns that increased institutional involvement could lead to greater market manipulation and increased volatility. It's essential for regulatory bodies to monitor the market carefully and ensure that all investors, including institutional investors, are held to the same standards. Overall, though, I think that the trend of institutional investors investing in Bitcoin and other cryptocurrencies is likely to continue as concerns about inflation and the stability of traditional financial systems persist.
Thank you for sharing your insights on this topic. Nike, could you expand on how the U.S. government's stimulus packages could impact the value of Bitcoin and other cryptocurrencies in the long term?
Absolutely. The U.S. government's stimulus packages have injected trillions of dollars into the economy, and this influx of cash has to go somewhere. A significant portion of this money has gone into the stock market, which has reached all-time highs despite the economic downturn caused by the pandemic. However, some of this money has also gone into alternative investments like Bitcoin and other cryptocurrencies. In the short term, this has resulted in a significant increase in the value of Bitcoin. However, in the long term, there are concerns about the potential impact of the stimulus packages on the value of Bitcoin and other cryptocurrencies. One concern is that the stimulus packages could lead to inflation, which could decrease the value of fiat currencies, including the US dollar. If this happens, it could lead to an increase in demand for alternative stores of value, like Bitcoin. On the other hand, the US government could also increase its regulation of cryptocurrencies, which could impact their value. For example, if the US government introduces stringent regulations on cryptocurrencies, it could decrease their value as investors become more cautious about investing in the market. Additionally, the government could introduce a digital dollar, which could provide a competing alternative to cryptocurrencies. Overall, the long-term impact of the US government stimulus packages on the value of Bitcoin and other cryptocurrencies is uncertain. While the influx of cash could lead to increased demand for alternative stores of value like Bitcoin, increased regulation or the introduction of a digital dollar could have the opposite effect.
That's certainly an interesting perspective, Nike. It's clear that there are a lot of factors that could impact the value of Bitcoin and other cryptocurrencies in the long term, and it will be interesting to see how things develop in the coming years. Do you think that the current inflation rates in different countries are driving people to invest more in cryptocurrencies?
Absolutely. In countries where the inflation rate is high, people are looking for ways to protect their wealth. Cryptocurrencies offer an alternative to traditional investments like stocks or real estate that may be affected by inflation. As a result, we've seen a surge in demand for cryptocurrencies like Bitcoin in countries like Venezuela and Argentina, where inflation rates are high.
What about countries with low inflation rates? Are people still investing in cryptocurrencies there?
Yes, they are. Even in countries with low inflation rates, people are looking for alternative investment opportunities. Cryptocurrencies like Bitcoin offer a high degree of liquidity and can be easily traded on exchanges around the world. This makes them an attractive investment option for people in countries with low inflation rates who are looking to diversify their portfolio.
So, Nike, some experts believe that the rise of CBDCs could actually reduce the demand for cryptocurrencies like Bitcoin. What's your take on this?
Well, it's certainly possible. CBDCs are issued and backed by central banks, which can make them a more attractive and reliable alternative to cryptocurrencies. CBDCs may also be more widely accepted as a means of payment and may have greater liquidity compared to cryptocurrencies. So in some ways, CBDCs could reduce the demand for cryptocurrencies.
That's an interesting perspective. On the other hand, some experts believe that the rise of CBDCs could actually increase the demand for cryptocurrencies like Bitcoin. Can you explain this further?
Sure, CBDCs are still issued and controlled by central banks, which means they could still be subject to inflationary pressures. Cryptocurrencies like Bitcoin, on the other hand, are decentralized and have a finite supply, making them less susceptible to inflation. Additionally, some investors may prefer the anonymity and security features of cryptocurrencies over CBDCs, which are likely to be more closely monitored.
That makes sense. So, what do you think will be the ultimate impact of CBDCs on the demand for cryptocurrencies like Bitcoin?
It's really hard to say at this point. CBDCs are still a relatively new development, and their impact on the cryptocurrency market is still unclear. However, it's clear that CBDCs represent a significant development in the world of digital currencies and could have far-reaching implications for the adoption and use of cryptocurrencies in the years to come.
And are there any specific industries or sectors that may be more likely to turn to cryptocurrencies as a way to protect against inflation?
Yes, there are certainly some industries and sectors that may be more likely to turn to cryptocurrencies as a way to protect against inflation. For example, industries that rely heavily on global trade and currency exchange may be more inclined to use cryptocurrencies as a way to mitigate the risks of inflation.
That makes sense. Can you give us some examples of industries or sectors that fall into this category?
Sure. Industries such as e-commerce, logistics, and finance are heavily reliant on cross-border payments and currency exchange. They may be more likely to turn to cryptocurrencies as a way to avoid currency fluctuations and inflationary pressures. Additionally, countries with unstable or volatile currencies may also see greater adoption of cryptocurrencies as a hedge against inflation.
That's really interesting. What about individual investors? Are there any specific groups of investors who are more likely to turn to cryptocurrencies as a way to protect against inflation?
Yes, certainly. Investors who are looking for alternative investments to traditional assets like stocks and bonds may be more likely to turn to cryptocurrencies as a way to protect against inflation. Additionally, high net worth individuals and institutional investors may also be more interested in cryptocurrencies as a way to diversify their portfolios and mitigate inflationary risk.
That's a great point. So in summary, it seems that industries that rely heavily on global trade and currency exchange, as well as countries with unstable currencies, may be more likely to turn to cryptocurrencies as a way to protect against inflation. Additionally, individual investors who are looking for alternative investments or who have high net worth may also be interested in cryptocurrencies as a way to mitigate inflationary risks. Thank you, Nick White, for your insights on how inflation in the U.S. affects Bitcoin. It's clear that inflation has a significant impact on the value of Bitcoin, and it's important for investors to understand this when considering investing in cryptocurrencies.
As always, we hope this podcast has been informative and useful to our listeners. Join us next time as we explore more topics related to blockchain and cryptocurrencies. Thank you for listening.